What's up, guys? It's Rob here, and today we're going to be talking about oil because oil is a very important part of the economy worldwide, and there are worries that Russia is not going to be allowed to send oil out of the country, and everybody knows Russia is a massive oil producer. So we're already starting to see big jumps in the price of oil. But how much do we actually rely on it? We're going to break down how much we actually rely on it and what effects this could have worldwide, not just for the US, because the United States is, all things considered, not too reliant on Russian oil, but we'll get into that a little bit later. First off, US oil jumped to a 7-year high, above $101 per barrel, as people are worried about these Russian supply shortages, as Russia is assaulting Ukraine, okay? And in fact, the Ukraine foreign minister has slammed big oil's links to Russia and has actually said that these big businesses, these big oil companies still doing business with Russia, are on the wrong side of history. He said the world will judge them accordingly and history will judge them accordingly. And some oil giants are actually taking note of this and deciding to cut some of their ties with Russia. Shell is a notable corporation doing this. They intend to exit their joint ventures with Russian gas giants. BP also announced on Sunday that it was offloading about a 20% stake in a Russian-controlled oil company, and other oil companies are being pressured to follow suit. So we're likely to see less Russian oil being exported in the future, and that will have some effects on the world. Now, unfortunately for some countries, Russian oil is rather important. Okay, Russia produces almost 11 million barrels of oil per day, and it uses about half of this for its own demand. So it exports the other 5 to 6 million barrels per day. Now, Russia is actually the second largest crude oil producer in the world. The United States is number one, and that means Russia is ahead of Saudi Arabia, which is number three. Now, 2.5 million barrels per day go to European countries through a big pipeline and through ships. So Europe is a massive consumer of Russian oil. About 30 to 40% of European oil is coming from Russia, okay, of what they use each day is coming from Russia. So a massive quantity of oil that's used in Europe is coming from Russia. China is another big consumer of Russian oil. It imports about 1.6 million barrels per day of Russian crude oil. And lastly, we have the United States, which actually doesn't use that much. In 2021, the average amount of oil imported per day in the US was 209,000 barrels of crude oil and 500,000 barrels of other petroleum products, okay? Now, this sounds like a still somewhat significant amount until you realize how much oil we actually use, because Russian crude accounts for only 3% of U.S. crude oil imports and about 1% of crude processed by U.S. refineries. So it's about 1% of the oil that we use here. So all in all, not the biggest thing for the United States. Now, that doesn't mean that the price of oil isn't going to go up. In fact, this has been going up as I've been watching it live. It's now up 8%, the price of crude oil today. And this is a dramatic increase. You can actually see this yearly chart right here, which shows we started the year around 60 bucks. And now, a year later, we're closer to 103. So we've almost doubled. We wouldn't have to go that much more to have fully doubled the price of oil in a single year. An incredibly dramatic increase. And this is a lot of this is due to Russia fears, right? During the past month or so, people have been paying a lot more for oil because of worries about potential sanctions. People are stockpiling it. And you can see that we are actually getting to pretty significant prices that we haven't seen the likes of since the past many years, since as far back as this chart goes at the very least. So scary stuff to see. But we are probably going to continue to see higher prices in oil if we do see a decline in Russia's ability to supply it, because demand is probably going to remain fairly constant. Demand is probably going to remain relatively the same. Maybe it will go up a little bit if there is some kind of big war going on that extends past what's happening in Ukraine, as militaries start to ramp up their demand for it, as they use more vehicles and whatnot. We could potentially see more oil being used, but supply is really what we're worried about. If we do import or input big sanctions on Russia and stop importing oil from them, not just in the US, but in Europe as well, then the supply is going to have to come from somewhere. So we're going to have to get it from somebody else. And thus, the supply would be drying up, right? There'd be less supply if we just cut out Russia from all of this trade. And if demand is staying the same, then according to this function, price should be going up accordingly. And this could be a pretty dramatic change in price if supply really gets decreased a lot. Because once again, Russia is the world's second largest producer of oil. And this could lead to massive price increases over the next couple of weeks and months if we really decide to cut off Russia from their oil trade, then it could have pretty significant impacts. Obviously, China has stated that they will continue to trade with Russia, but there is a lot of pressure coming on people as as the Ukraine foreign minister and other people in Ukraine advocate for not just oil companies, but a ton of companies to stop doing business with Russia. It's not looking like a great situation for the Russian economy at the moment either. But all things considered, at least they've still got oil, right? They're looking at this like they're still making a lot of money off of oil, and in fact, they're making a whole lot more money off of oil than they were just a couple of months ago when the price was much lower. So this is actually really good for Russian oil companies. In some ways, it's bad, right? Their currency is collapsing, but in the sense that they're selling a whole lot more oil for a much higher price, it's a good thing. So that's what we've got in today's video. Just want to explain some of the reaching effects that we might see from oil being less available in the United States. There's not too much to worry about because we don't rely on it all that much, but prices will still probably go up. Europe is a different story. They're going to have to either find a huge new supplier of oil or cut their consumption of oil by quite a bit. So in Europe, it's not as pretty of a situation, but in the US, all things considered, it could be a whole lot worse. So other than that, guys, keep in mind that this is financial advice. And other than that, have a great day. I'll see you in the next one.